Hello, everybody. Welcome to Simply Funded. My name is Cheree. I am your favorite lender here, and I have a wonderful guest with me today joining us. You all know I like to bring you successful real estate investors, and I think you're really going to like this young lady here. Rebecca Cullen is in South Carolina. She is an agent, a real estate agent, but she's also an investor. So in the grid world, or in the Simply Funded world, we call her an agent investor. So, Rebecca, welcome.
Thank you. Thanks for having me.
Absolutely. So, tell us about yourself. Were you always entrepreneurial? How did you get to real estate, period? Uh,
Yeah, I love that question. So I always had an entrepreneurial bone in me, yet I liked structure and I liked um, having guarantee risk, or I'm not really a risk taker, or I wasn't back in the day. And so I became an investor because in 2009, when my husband and I first bought our first house um, with an FHA loan, we put 3.5% down. And we actually were able to take advantage of the first time home buyer credit that was
mhm.
$8,500
I remember
back
that.
to us in our taxes.
Mhm.
And then we couldn't sell it when we wanted to buy our next home. And so we became automatic landlords.
Ah,
And that was the blessing and everything. So bought our first house in 2009 and turned it into a rental property in 2011.
mhm.
And it was fairly simple to become a landlord. And
Interesting.
I stayed a landlord until 2016
Mhm.
and, just kept having that itch to do it over and over and over. And I did. And then I got my license so that I could help other people to do it.
Fantastic. So many people become accidental landlords. We did. My mother and I inherited some property, and we became accidental landlords. And sometimes that's a great way to do it as well, because you're just like, okay, I have this property. I'm not going to live in it. Let me see what I'm able to do. Now, why weren't you able to sell your house though? Was it something with the loan or?
No, it was because the market was just
Oh, the market
really,
was just so bad.
yeah. So 2011, the market hadn't become what it became in
Right.
2014 through 2021, basically.
Mhm, mhm.
Um, and
And
so
you
we,
missed out on all that appreciation then.
yes.
Wow. Wow. That's amazing. So, what was it like becoming a landlord? I know you were kind of pushed into it, but did you research crazy amounts? Like, what was that like with regards to saying, okay, I'm going to do this and getting your first tenant?
Yeah, so I went on Bigger Pockets when Bigger Pockets was still just a blog,
Uh-huh.
and I did a ton of research. I would watch HGTV. There was a show called Income Property,
Mm,
and I wasn't watching the pretty shows. I was literally watching the shows that you were taught how to become a landlord or how to price the rental listings appropriately. And
mm-hmm.
so I just became, a bootstrapper, I'm a student first and foremost. And so I didn't have anyone really helping me. And I wanted that next house. I wanted to move into my family's upgraded home. And so I had to find a tenant.
Yeah.
Um, I went on LegalZoom and I got all the appropriate documents. And that was the first step into creating what now is a huge business for us.
Fantastic. So then walk us through you got your first renter, things are going well. And then you became an agent, or did you start like buying more properties and then decide to become an agent? Give us a little bit more of a
Yep.
timeline there.
Yeah. So I got my real estate license in 2015.
Okay.
So I had purchased properties for my husband and I. We had done transactions,
Mhm.
and we were doing the whole house hacking thing where, oh, okay, we'll just keep this property and we'll move to this one and then we'll put renters. So we did that twice
Hmm.
in that time frame. But it was really, again, because we were upgrading our home.
Right.
And then in 2015, when I got my real estate license, I realized, I could do this for other people. And a
Hmm.
lot of my initial clients were investor clients.
Hmm.
And, whether it was second homes or doing the house hacking thing, I treated every single buyer customer of mine as if they were either going to keep this house in the future
Hmm.
or their intention was to, um, you know, appreciate it so much that they'd be able to buy multiple properties with the future profit that they had.
Perfect. So I have to apologize. The wind, all of a sudden, like the sky turned dark and it's like really windy. So if for whatever reason I cut out, please forgive me. It's the electricity here. Uh, but okay, so I think it's fascinating. You have this process of, seeing buyers and saying, you may be in a position where you're living in this house. Let's turn it into a rental, move you and your family up to the next property, and then do that a couple of additional times. Because Mike Weber in the Reston, Virginia office, he's known as the House Hack King. And he finds the same thing. He finds a lot of people who want to get into investing, but they don't own their own property. So he's saying, okay, let's get you into your first property. Let's let you house hack, because he works with a lot of young professionals, and let's not make you house poor. Let's at least try to figure out a way for you to rent out a portion of the house, if not the different rooms. So I think that that's so important. Go
So
ahead.
one of my first clients actually, he came into one of my open houses, and he, to this date, like, even, what are we? We're 9 years into this relationship.
Mm-hmm.
And he said, "Hey, I learned about Airbnb on Bigger Pockets," which Airbnb didn't really exist, or at least it wasn't in our world. And he
Right.
said, "I want to buy my first home, but it has to be a 5 or 6 bedroom because I'm going to rent out the rest of the rooms."
Mm-hmm.
And I was like, whoa, like, this guy needs to be in my world. And that day, we came into the open house. I was like, "Hey, I would love to be your buyer's agent." We signed a buyer agency agreement,
Mm-hmm.
and I went out and I showed him the only three 5 to 6 bedroom properties that were on the market at that time. Again,
Mm-hmm.
this is 2016 timeframe. And he still owns that house today. It was his primary residence, and he lived there for 3 years. And now it's a full long-term hold for him. It's almost paid off. And
Wow.
then he has bought and sold 3 other properties with me, and we manage 2 of his properties currently. So he's a great long-term client of mine. And if I wasn't familiar with the entire idea of owning and investing,
Mm-hmm.
he probably would have just slipped around and walked out of the open house.
Right, right. So I don't know, you let me know how you talk to people, but I always ask people, like, how many doors do you want? And are you looking for cash flow, or are you looking for appreciation? Or, of course, everybody wants like both, but tell us a little bit about how you actually drill down with people and figure out what their true wants and desires are for their portfolio.
Yeah, oftentimes people have no idea. They're just like, "I have this extra surplus of cash and I want to deploy it." And I'm like, "Great." So I do spend some time talking about the differences. Another blessing of having a grid chapter that we run is that we talk about the life cycle of an investor, so we
Mhm.
can we can send them to those classes.
Mhm.
Um, Yet if I have 30 minutes with them, we drill down into, are you risky? Do you want, to hear from the tenants on a daily basis? If they're more passive and they don't want that, then maybe flipping is more something that they should be talking to a lender about.
Mhm.
Um, Also syndication, if they're really looking, "Hey, I have $100,000 and I just want money in
Mhm.
my account," that may just be a syndication opportunity for them if they're an accredited investor. And so we just walk through what their different options are. Of course, we have a property management company that we own that we're able to create more of a passive opportunity for them. Yet there's not a lot of cash flow in some of our deals that we're seeing today.
Hmm.
That's going to change as soon as rates, the rate
Low,
environment
low,
changes.
yeah, get lower. Yes.
And so, again, it just depends on risk. It depends on how long they're willing to be in this investment. And oftentimes, first time home buyers, they don't really see past the 2 year mark.
Hmm.
Um, and so, we're not steering them towards anything. We're just guiding them to great, profitable opportunity for their future.
Perfect. Perfect. So you became an agent, and you did help this one gentleman. Talk to us a little bit about how you actually got started with Grid. Like, I know you said that it was well, you didn't say that. I guess I am putting that on you that you wanted to find other like-minded people, I would guess. But,
Yeah.
how did you find Grid and why did you decide to start a Grid chapter?
Yeah, so I was somewhere and Rob Chavez was at that event and he started sharing a little bit about it.
Mhm.
And um, you know, Rob has been in my world a long time and I had just kept hearing his name over and over.
Mhm.
And I have been in multiple mastermind groups. And one of my previous coaches, Brett Tanner, who also runs a big wealth group, he also was part of Rob's world. And so you know, I was looking for an opportunity to get education into people's hands
Mhm.
and yet couldn't quite figure out the curriculum of that. And so Grid is that solution for us.
Yeah.
And for, plug and play systems, which I love, I don't need to recreate any wheels. And it allows us to be the subject matter experts in most of the categories. And when we're not, I get to invite those subject matter experts to be part of our world.
Right.
And that's one of my favorite things about Grid is the relationships that we're building and also the partnerships that I didn't even know were available to us.
Yes, yes. So, I was asked to give a presentation for Grid, actually, a recorded presentation. And one of the things I said was, the topic was like the 5 strategies to get the best loan terms possible. And one of the strategies I had was your network. The more powerful your network is, the better the loan terms are going to be. And you may say, well, Cheree, that sounds crazy. Why would that be? Because if I know that you have strong relationship with your contractor, for example, and the lender, the underwriter knows that, we're able to show that, like, hey, you've done 6 flips, right?
Yes.
You're going to get better terms. So it's so important, the relationships that we have in this business, and real estate investing as a business, I think is so important. You know, so so tell us about some of the properties that most like, with regards to your portfolio. Like, what do you invest in? What do you like to invest in?
Yeah.
And then give us a couple of success stories as well, if you want to.
One of my favorite things at all of our Grid events that we talk about is creating that avatar, creating that buyer box.
Hmm.
And for me, initially, it was if it was a good deal, we would buy it.
Hmm.
And there was really no other criteria to that. And then 2019 to 2021, deals started getting a little harder to find.
Yes.
And so I got really super clear that if it was a 3 bedroom, 2 bathroom, 1 car garage in a great school area, I'm buying it.
Hmm.
And we inevitably found, I'm trying to count, we have one, two, three, four, 5 of them in our portfolio right now. And
Okay.
those were all purchased between 2019 and today. And it's because I was very vocal with agents or wholesalers or even friends
Hmm.
that this was my buyer box.
Hmm.
And so it would always show up. We actually just partnered with you, Simply Funded, with a recent exact avatar of that was supposed to be a flip.
Hmm.
that, again, the market is a little wonky. So we're putting a tenant in place for a short time and then we'll try the market again.
Right.
But that's the exact avatar that we just bought in June. That it hasn't changed. Now what I'm going to say is I'm back to, if it's 30% or the ARV is well within the 70% loan to value
Hmm.
and the cash flow is really positive, then we're going to buy it.
Okay.
Right now, I'm not in the appreciation game. I'm
Hmm.
in the pure cash flow game, and we have very strict parameters around what that looks like. If it doesn't match that, then we're not buying it.
And is that like, so when you said we, the only reason I'm asking this is because I do think that sometimes people need to have like that person that can say, okay, but that doesn't fit in your buy box, right? So is the we you and your husband? Is it you and another partner? Or when you say we, is it just you?
It's me. Yeah.
Okay.
So
It's the
we,
angel and the devil.
yeah, it's the two talking. My husband's definitely active when it comes to conversations. However, he's more of a passive investor with me, and it's really money that we have raised and money that we have built this portfolio up to. So each thing is our business.
Right.
When I say our business, it's really my business, but it's CNC Acquisitions, and he's a 0% owner.
Oh, okay.
Um, but I will say we've done some other investing, whether it be syndications. We purchased a 75 unit in Chester,
Hmm.
which is in South Carolina.
Okay.
And already that has appreciated about $1 million.
Hmm.
And so we'll see those returns within 23 months, which is really
That
amazing.
is fast. Yes.
And then we're purchasing another fix and flip with
Hmm.
Simply Funded,
Yes.
September. And so that I I was kicking and screaming getting into the flipping game again.
Hmm.
It is not passive for me. It's very noisy.
Yes, it is.
However, we have really great vendors and contractors, so that's why we're doing it. But I would take a long-term hold any day
Right.
over a flip.
And I will say this to anybody who's listening, you can always fix and rent, right? There are a couple of different types of loan products that I work with my clients on when they decide they want to fix and rent. There are even loan products where you say, you know what, we can actually have a client like this. She buys three twos and turns them into six fours without adding square footage, right? She does this in the DC area. And then what she and her husband do is they rent it out on Section 8 for $6,400 and they make very good cash flow from that. Because that's how much DC pays for their Section 8 for six bedrooms. So, there are a lot of different ways to make money. When you're mentioning fix and flips, fixing and flipping isn't for everybody. If I have a associate. One day she'll be a client, but she basically is out with her construction people 3 or 4 times a week, or she says they will put the vanity in the wrong place. So this and that. So I think that people have to recognize that fixing and flipping, it is active. It is an active process. It is not passive. So.
I will say we had a huge win
Mhm.
earlier this year with a fix and flip that returned us $52,000.
Oh, fantastic.
That was the net after. And
Hmm.
so if you're telling me that in 3 months or less I can make $52,000, I'm in,
Sign
right?
me up. Exactly.
Um, but I knew that that was more of a luxury purchase,
Mhm.
and I knew the contractors were going to be all on that property, not leaving it to go to other projects. I had
Right.
them on a retainer. And so if you have that comfort and you have that plan,
Mhm.
then awesome. But, you know,
Yeah.
I'm a renter. I love being a landlord.
We love the rentals. And I think what I hear from you is you're very confident in your strategy, but your strategy also moves based on what's happening in the market, what's happening. I'm sure right now politics, and this is not Republican or Democrat, but based on who wins, we're going to see potentially different housing um, legislation and policies going through, et cetera. So it's going to be very interesting to see what happens. And you seem very fluid, like, if I need to be in the appreciation game, it seems like you're there. If you need to be in the or want to be in the rental game, then you're there as well. I
Yes.
also like how you really focus for a time on the 3 2s with one car garage, because this is old school, but in the 80s, there was this guy, Ron LeGrand, and he used to always talk about buying the bread and butter houses, right? And when you said that, it made me think of bread and butter houses. Like, yes, families want, a good school, safe, secure neighborhoods, and, 3 bedroom, 2 bathroom. You won't say you can't lose with that, but it's hard. It's
Yes.
harder to lose with something like that. Yeah.
Yes. Yeah,
Yeah.
my rule really is, if number one, if I won't move into it, then I'm not buying it.
Mm-hmm.
That is only an exception when I'm buying out of state. So I
Mm-hmm.
have a property in St. Louis, Missouri, and a property in Ohio, Cleveland, Ohio. I've never been to them, and I just trusted the agents that sent those projects our way.
Right.
And so if I'm not willing to move into the property, I'm not even going to invest in it. Not to say that one of my clients won't buy it, because
Right.
that usually is the case. I've had a couple of scenarios since 2009
Mhm.
when, my family may have had to move into it because we, made a mistake with a purchase, or we had a beach house at one time in 2020 when COVID hit.
Mhm.
Who knew that Airbnb was going to explode like it did?
Did.
I freaked out and we sold it.
Mhm.
And, I kick myself because although we had a great profit, um, I was a little emotional in that decision.
Mhm.
So in
But it was a
2000,
scary time too. So, I
it
mean,
was. I bought
yes.
a couple of properties with those gains though, so that was good. And then in 2022, we bought another one. So now we have another beach house that stays rented Airbnb.
Okay. So, next 3 to 5 years for you, what do you see for yourself? And then what should other investors who may want to come and connect with you in South Carolina, what should they be asking for, if they're going to engage you with regards to the South Carolina market?
So full disclosure, we're North and South Carolina. We're
Oh,
Charlotte Metro.
yes.
So I'm literally 5 minutes from the North Carolina border.
Even better.
It is even better. We tend to invest in North Carolina over South Carolina just because of taxes
Mhm.
and the investor rules that they have in South Carolina. But to answer your question, the next 3 to 5 years, I do have a plan to be able to act like OfferPad, Open Door, hedge money, create opportunities for any of our cash buyers. Um, I want to be able to walk into our clients' homes, and if they decide to let us buy their home, there's no question of whether or not we can,
Right.
because oftentimes I find myself going on appointments
Mhm.
and I'm the one actually buying. And then if I'm too tied up, like right now, I have 3 deals going on personally,
Right.
and that's all of my resources. So the next appointment that we go on, if I can't purchase
Mhm.
personally, I want to have another option.
Right.
Um, and so the next 3 years is going to be the plan around executing or raising capital to be able to make more purchases for the LLC. And then also our investment portfolio. Right now we're at $7 million.
Mhm.
Our plan is to get to $10 million.
Okay.
And then our net worth will be closer to about 5 million with all those loans.
Fantastic. So, I personally simply funded in myself. We have a goal of 10,000 member community. So we hope maybe we'll be able to help you with regards to reaching some of your goals and connecting with investors. And I do have people now starting to contact me asking, like, hey, if you ever find any great deals, let me know. So I'm going to start expanding some of the questions I'm asking people and seeing if they want to invest in the Carolinas, like we have Justin and Corey out in Knoxville and other places as well. So be on the lookout for that because I would love to definitely connect people and people who are watching this. I definitely want to give you a chance to let people know how they can reach out to you in your office. You've got some fabulous ladies working with you in your office as well. So I can
Thank you.
personally attest to that. But how could somebody reach out to you if they want to find out more about your market and how to invest there?
Yeah, so I think the best way is to go on. So it's bnopenerofdoors.com. It's a mouthful, but it's the Ralph Waldo Emerson poem, beanopenerofdoors.com. That's our website. If you just go onto the contact us form, you'll get me.
Mhm.
We also have a platform for property management, which is called Convenient Rentals. And if you just Google convenient rentals, we'll pop right up. And I think the best way to contact me directly is just call me 980-428-4477. And I'm I am a fan of Cheree and her team. And for many, many years, not many, many years, a long time, Cheree was calling and asking how she could be a resource to us. And just like many lenders, I would ignore the calls until I actually needed her.
Mhm.
Um, but the reality is she's an incredible resource and she's very giving. And we've closed two, well, I'm closing two personally with you,
Yes.
and you've helped some of our clients. So we are so grateful for that.
Well, I appreciate that. I appreciate you. And, we try to offer five-star service to everybody that we work with, whether or not we can help you. But for investors, our goal is to be able to be the matchmaker, matching you and your property to the right loan and having it be as smooth of a process as possible. That's our big goal. So,
Sure has
um,
been.
yes, thank you. Well, thank you so much for being with us. I want to thank everybody who is watching this podcast, watching us on Facebook. We're going to be uploading it to YouTube and our other social channels as well. Any final words, Rebecca, before we head out?
No, I thank you for your time and thanks for this platform in which to share.
Thank you. All right, everybody. Again, Simply Funded, you are able to reach out to us. You're able to call or text 703-951-4419 with any of your real estate lending questions. All right. Thanks, everybody. Bye-bye. Okay. Live.